Broadcom closed its fiscal second quarter with AI semiconductor revenue of $8.4 billion, a 106% increase from the same period a year earlier. That figure alone would have qualified as a landmark result in any prior cycle, and management went further, guiding Q2 AI chip revenue to $10.7 billion and putting a number on the medium-term horizon, more than $100 billion from AI chips alone by 2027. The stock fell anyway. In after-hours trading, Broadcom shares declined after the company reported earnings per share of $2.44, against a whisper number, the unwritten expectation circulating among active traders, of $2.45. The gap was 1 cent. Analyst consensus had been $2.39, which Broadcom cleared comfortably, and revenue of $22.187 billion beat the $22.04 billion estimate on that measure as well. Neither fact cushioned the reaction. The session that preceded the earnings release had already shown where the TSX's pressure points were sitting. Canada's main index fell 204 points as Middle East conflict escalated, with Iranian missile attacks intercepted over Bahrain and Kuwait. And the information technology sub-index shed 2.5%, while energy gained 1.8%. Broadcom's after-hours move arrived into that divided market, where the appetite for incremental disappointment, however small, had already thinned. Shopify, the TSX's most watched technology name, reinforced the pattern from a different direction. The company announced an additional $3 billion share repurchase authorization, bringing its total buyback capacity to $5 billion. And its shares fell $3.98, or 2.5%, to $157.97 on the day the confidence signal was issued. The whisper number is not a published figure. It is the informal, aggregated expectation of what a company must deliver to satisfy the most active segment of its shareholder base, and it sits above official consensus precisely because institutional positioning has already priced the visible estimate in. Broadcom had delivered 106% AI revenue growth. Its chief executive, Hock Tan, stated on the earnings call that the company had line of sight to exceed $100 billion in AI chip revenue in 2027, a figure that would represent one of the largest single-product revenue commitments in semiconductor history. Hyperscalers, the handful of companies building frontier AI infrastructure, rely on Broadcom's application-specific integrated circuits, known as ASICs, and the company has disclosed agreements with Anthropic and OpenAI as customers. The revenue trajectory from that customer base had been visible enough that UBS analyst Timothy Arcuri wrote in mid-May that street estimates look very beatable, and that Broadcom was likely to guide well ahead of the $22 billion consensus. That framing, repeated across enough institutional desks, became the whisper. When the actual EPS printed at $2.44 instead of $2.45, the position that had been built on the expectation of exceeding the whisper had no reason to hold. The selling was not a verdict on the AI demand cycle. It was a function of where the stock had been taken ahead of the print. For Canadian investors holding AI-exposed equity, through technology ETFs, through pension allocations, or through direct positions in Broadcom itself, the mechanism matters more than the headline, because the same dynamic applies to every high-conviction holding that has been bid up on the strength of a consensus that is already running ahead of reality. Shopify's $5 billion buyback announcement, which should have carried unambiguous balance sheet confidence, was priced down on the same afternoon, a second data point confirming that the session's capital was not rewarding signals. It was punishing any gap between what had been anticipated and what arrived. The question Broadcom's result leaves open is whether the $10.7 billion Q2 AI revenue guide becomes a floor or a ceiling for the next whisper cycle. If hyperscaler capital expenditure continues at the pace signaled in recent quarters, Broadcom's ASIC volumes have a structural support, and the after-hours reaction becomes a reset rather than a reversal. If AI infrastructure spending decelerates, pressured by rising yields, Middle East risk premium on energy costs, or any softening in hyperscaler guidance, then the 1-cent EPS miss is the first visible crack in a valuation that had priced in a faultless execution path. The CRTC's streaming policy provides a parallel illustration of how quickly a regime that appeared durable can be re-examined under external pressure. Ottawa ordered a review of the regulator's 15% Canadian content levy on foreign streamers within weeks of its implementation, citing potential violations of the United States-Mexico-Canada Agreement ahead of the July 1 trade review. The policy did not fail on its own terms. It failed because the bar it set exceeded what the surrounding framework could hold. For the TSX information technology sector, which fell alongside Broadcom's after-hours move in a session already pressured by geopolitical risk, the verification point arrives with Broadcom's next quarterly report. $10.7 billion in AI revenue either confirms that the demand cycle is intact and the whisper miss was noise, or it does not, and the $100 billion 2027 figure becomes the next number that the market decides to interrogate rather than accept. The leaning, for now, tilts toward cycle intact. AI capital expenditure from the hyperscaler tier has not shown deceleration, but the session's reaction to a 1-cent shortfall is its own signal about how little margin the market is currently offering to any name where the whisper has run ahead of the print. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.